Welcome back to U.S. Farm Report this weekend. John Sheave joining us, as well as Mike North. Had some reports out from USDA Friday. Typically not a big market mover. And John, it seems like USDA is in line with previous years. It really nothing major out of this report.
That's right. I usually view this as probably the least important report of the 15 reports released during the year. We shouldn't expect anything. I think our focus is now solely on weather in South America for the bean crop, and that'll be basically from December 20th through January 20th. That'll be the biggest time frame. Also, the exports will pick up for U.S. beans during that time frame, so we should see some. If we're going to see fireworks, it's going to happen during that time, and especially depends what the weather is like for that. For the corn market, I don't see any reason to worry about South American weather for corn until we get till April or May when that second crop goes into a reproductive stage, and then maybe we can have a fireworks for corn. But at that time, or until that time, I just look at a farmer wants to get $5 for corn in the U.S., so that's going to be a trouble for them to sell it. Or a point at which it gets sold, and then I think the end users want to buy $4.50. So we're probably stuck in a range somewhere around that $4.75, $4.80 mark, up or down 20 cents from there.
All right, Mike. I mean, John mentioned it's just too early to know right now the verdict in Brazil and Argentina. We did see USDA trim its Brazilian soybean forecast by 2 million metric tons. Didn't touch corn in Brazil, didn't touch corn or soybeans in Argentina. Do you agree with John? Was it justified to really not make any major moves at this point? It's just too early?
It is too early, and when you look at this time of the year, we often don't make adjustments. The fact that they lowered bean production by 2 million metric tons kind of falls in line with some of what I'll call boots on the ground analysis. Some talking about the early weather maybe taking the cream off of the top, especially in northern Brazil. But it is really too early. We're as we saw with our own soybeans this year. Way too early in the game to be destroying yield when we're just getting them in the ground. So, yeah, I would tend to agree with that.
John, you mentioned that, you think corn's going to just continue in this sideways trading pattern, but you look at the weather and kind of the talk about weather in South America and the impact it's had on the crop so far, not knowing what's yet to come. Do you think this could be, though, a bigger story in corn or soybeans?
I think the weather first has to be a story for soybeans because that's the first one that's going to be affected. There could be a bit of an argument made that if the bean crop is delayed a little bit from its plantings, that possibly that could push plantings back on the second corn crop, which would then end up in the May dry season and maybe hurt the yield a little bit. But since their yields are already only 80 bushels per acre across the country in general, I don't know that it's going to be a substantial drop with the rain. And it's a massive area when you look at from the top of Mato Grosso to the bottom of Argentina's growing area in the Santa Fe region. You're talking about 2,000 miles compared to Fargo, North Dakota to Jackson, Mississippi is only 1,200 miles. So, I mean, massively big area. It's spread out over a much bigger area, and the weather is way different across all of that area.
Wow, when you talk about it that way, it just allows us to see the scope of what we're talking about in South America right now. So, Mike, then moving forward, we mentioned it, corn could continue to trade in this sideways pattern. I mean, at the end of the day, do you agree with that?
Yeah, I think until we've got better knowledge of what the crop is, we do probably chop around here through the winter. Obviously, the January report and any adjustments they give us by way of yield in that could swing that out of the range. And I would say, too, as we evaluate demand, that will also help swing conversation a little bit. But right now, both of those elements likely just keep it a little bit more sideways. And we've got a month before the January report now. So that probably puts us to sleep here for the next 30 days.
John, do you think this is an opportunity to lock in feed prices or not yet?
Locking in feed prices, I think I would buy on any of the dips. But from the sales side, I'm more concerned about a farmer who's unpriced. They need to be selling into any little rally they can, especially if they're far behind. But from feed price, I would stay in the spot market almost all the way through for the rest of the year. I wouldn't buy more than 30 days out.
Mike, you agree with that?
Absolutely. I'm a fan of calls on the feed side because the bias is certainly lower here. Agree with John that producers need to be more aggressive sellers of rallies. You go back and you look at stocks to use ratios at 15%. In prior years, that suggests a 3.5 to 4.25 price point. Here we are hanging out at levels around $5. We need to be sellers of this. Inflation or no inflation, price adjustments lower are quite likely as we examine the path forward for corn.
Well, USDA also making minor adjustments to U.S. ending stocks. Could more be on the way with these ramped up buys from China and places like Mexico? We'll discuss that later on U.S. Farm Report. Please stay with us.